Hello, chart watchers, and welcome to this Thursday, April 11th, 2019 Market Watchers live show with your hosts, Tom Boley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's get into the market action today. Currently, we've got the Dow Jones Industrial Average down 47 points, the S&P 500 down 3, the NASDAQ down 15, and the Russell 2000, which had a really big day yesterday, holding up better than the other indices today, down just 1 point. 10-year Treasury yield bouncing a little bit today, up about 2 basis points, 2.49%. Volatility continues to drift lower. We were down below 13 again earlier today, but we've bounced back currently at 1340. Leading to the upside today, industrials and financials, both in the positive despite the overall indices being lower. But clearly the laggard today is healthcare. You can see a huge move down today in the XLV. Primary culprits, healthcare providers, which actually going back down possibly to test a multi-month low. And then biotech. Biotech got very close to a breakout again yesterday and earlier this week. But you can see we have reversed back down. So we are staying in that trading range. And then finally, renewable energy, which has just been on fire over the past 2 to 3 weeks, is pulling back a little bit today, down a little bit more than 1%. All right, it is Thursday. It's the start of the Masters, and we've also got Mary Ellen with us today. Erin, unfortunately, could not make it today, so she'll be back with us on Monday, but that means we get an extra day of Mary Ellen. How are you doing?
That's right. Oh, I'm doing very well.
Good. Are you a sports fan, golf fan? Are you into the Masters at all?
I enjoy sports, but my try at golf was pretty dismal, so I stick to tennis.
All right, well, maybe the French Open then or something, or Wimbledon?
Oh, absolutely, yeah. You'll see me. I used to go live all the time to the U.S. Open. When I worked in New York, we would.
Okay.
Yeah.
Yeah, that makes sense.
Quite a bit of fun.
Yeah, it is good to have you again. So we're going to have you 2 days this week. I told you when I saw you this morning, that means I must get tomorrow off.
That's right. I usually see you on Fridays.
Well, unfortunately, I guess I'm going to have to come back tomorrow, but it'll be fun 2 days. We also have a very special guest with us today, Roman Bogomazov. Roman, how are you doing today?
Hello, Tom. Hello, Mary Ellen, and everybody. As always, happy to be here.
Well, we are certainly glad to have you back. A lot has transpired since we saw you a couple months ago. Market's been on fire. So we're looking forward to your presentation, and we're going to get to that in about 15 minutes. So please stick around if you don't mind.
Sounds great.
All right. Let's go ahead and jump into what's going on today. You can see, well, upcoming schedule first. Erin, like I mentioned, won't be here today. And, of course, on Fridays, Mary Ellen is here on Market Watchers Live. So Erin will be back with us on Monday, and she has a workshop on Tuesday. So she'll be sharing that with you next week. Next Wednesday, Tom McClellan comes back to join us on Market Watchers Live. Look forward to that. And then next Thursday, I'll actually be out. So Julius DeKempenaar is going to co-host with Erin. So you want to mark your calendars for sure that day. I'm sure Julius will have a lot of interesting content to add. As far as today goes, just mentioned, Roman Bogomazov will be here with us. He is one of the Mr. Wyckoffs, so he'll be giving you an update, I'm sure, on what's going on there. Our 10 and 10 today, we're going to start off with PayPal, PYPL. Take a look at the chart and see what you think of it. I will be back at 10 till 1 to annotate that one along with 9 others. You can see whether or not you agree with me. And then we'll end the show today with Momentum Sleepers. And, of course, Momentum Sleepers is a segment where we're just looking for stocks that have kind of maybe fallen under the radar here recently. So yesterday we had chart breakouts talking about a lot of the stocks that are getting upgrades in the news, moving higher, breaking out. Now we're going to talk a little bit about maybe some that have pulled back a little bit, maybe you're not hearing as much about, but still hopefully look pretty good technically. So that will be our final segment today. Looking forward to it. I think we're going to have a great show. But first, let's get started with technical news and headlines. And we're going to start with the economic reports out today. We did get initial jobless claims out, and they were much better than expected, 196,000 versus 211,000. And any number under 200,000 is a pretty good one when you go back and look at history. So I think that is good news. The bad news, however, and this was something I was wondering how the market was going to handle, the March PPI came in much hotter than expected, both the headline number, which was up 0.6% versus 0.4 expected. But then also when we strip out the more volatile areas of the PPI, the core PPI, rose 0.3%. This is the one that the Fed tends to watch a little closer. So it was higher than expected, 0.3 versus 0.2. So I wasn't quite sure what might happen. Normally, those two, a better than expected initial jobless claims and then a worse than expected inflationary report would normally mean, money rotating out of treasuries and the yield rising. And we're seeing a little bit of that today. We are up just under 2 basis points, 2.49% roughly. But we still got some overhead resistance here that we're going to need to clear. We're not there yet. So I don't know, kind of a mixed bag here. I personally would like to see that 10-year treasury yield get up above the 2.55% and really ultimately back up above 280 to end this downtrend and begin to uptrend. Okay, earnings reports. We got a few of those out, and they are going to really be picking up here soon. But you can see on your screen, 2 of them beat bottom line estimates, 2 missed. And that's not a typo, by the way. Those last 2, I had to double check myself. But the actual 85-cent gain versus 91-cent gain, that was true for both of those companies. But so we got a little bit of a mixed bag with the earnings reports. But let's take a look at what's going on in terms of their actual stock price. So the first one is Bed Bath & Beyond. And on Bed Bath & Beyond, first of all, I think the stock was already looking pretty good technically. I'm going to switch this over to my relative chart. Yeah, here you can see on a relative basis, first of all, specialty retailers. This is part of specialty retailers, which has been very, very strong. The group broke out, I don't know, maybe 3 or 4 weeks ago, clearing this triple top. That was about the 1700 level. So I think specialty retailers continue to be one of the best areas in the stock market. So that's going to be an area that I'm going to focus on in my trading. Now, as far as, as far as Bed Bath & Beyond goes, we are starting to see in 2019 some outperformance versus the S&P 500 and also a little bit of outperformance versus its peers, which I think is important. So it looks like this downtrend is ended with this breakout above the 0.01 level. And this could just simply be a pullback to test. Notice also on an absolute chart, the pullback came back down to price support and the rising 20-day moving average. Bed Bath & Beyond did come up a little bit short on its revenues, $3.31 billion versus $3.33 billion. But as shown on that slide a minute ago, they beat on their bottom line $1.20 versus $1.11, and they guided their fiscal year 20 earnings per share higher and raised their dividend 6%. So I think some of this was a pullback simply because the stock had risen from 14 to 19.5 prior to releasing its earnings. It's a pretty big move. That's what, 35% or so in about 2 to 3 weeks. So I think it was a buy on rumor, sell on news kind of event, and that hollow candle would certainly confirm that. So I think BBBY is an improving stock, and it's in a good space, one to keep an eye on. Fastenal. I remember earlier this week when we had John Hopkins on and we talked about some upcoming earnings reports. If you recall, this was one of the stocks I said, I'm expecting some good news out of this company. Look at the relative strength versus its peers. Look at its relative strength versus the S&P 500. The stock was moving up. Folks were buying this company heading into earnings, which tells me that we probably should expect some pretty good numbers. They matched revenue, but they did beat on their bottom line. I was looking for guidance. I did not see it here. Might have been on a conference call, though. I didn't listen to the conference call. But stock did gap up, so it's getting a very positive reaction. It is trading very bullishly. It broke out to begin April, went back down, tested both the breakout level and the 20-day moving average. Now gets solid earnings behind them. Volume picking up. We make another breakout. I think Fastenal looks pretty good. CBSH, this is Commerce Bank shares. So getting a look at a bank stock. And of course, we have JP Morgan, I believe, coming up tomorrow. That's going to be a big one. But CBSH was not trading particularly strongly. You see, first of all, the banks have not been trading very well. Commerce, though, heading into 2019 was doing pretty well on a relative basis, but has fallen apart in 2019. So over the past 4 or 5 months, we are now hitting a new relative low compared to the other banks out there. They did miss on their top line. They missed on their bottom line, gap down. It looks to me like we were already in this downtrend. So I think some of this is built in. But if we don't hold $56, I think Commerce could move back down to test that 53 area of support that we saw back in December. And obviously, when the stock markets come back up as much as it has off of that December bottom, last thing you want to own is a stock that's back at its December low. APOG. This is Apogee Enterprises, another company that missed on their top line, missed on their bottom line, guided their fiscal year 20 revenues and earnings per share lower. And you can see the gap down here. Big volume coming in. And on a relative basis, you can see that this stock really had been just kind of going along for the ride with its peers and with the S&P. So I wasn't really seeing anything spectacular. And in fact, if we go back about 9 or 10 months, you can see that this stock overall has been in a downtrend relative both to its peers and to the S&P 500. And the overall group relative to the S&P 500, it's improved in 2019. You can see a little bit of an upward trend. But overall, I mean, when we look back to a year ago, this is still what I would consider an underperforming group and a not so great looking stock. Big volume move down. I'm not interested. Really needs to hold on to about 34 and a quarter, 34 and a half, though. If we fail to do that, I think you're looking at a stock that's rolling over. And again, potentially that December low could come into play. Something to keep in mind. All right, another stock that was in the news I saw earlier was Caesars, CZR. And this is in the gambling space. The New York Post report indicated the company is contemplating putting itself up for sale. Now, I've said before, I'm not a big fan of these companies that come out with news like this because, number one, you don't know if anybody's going to pay a premium for it. When you look at it on a relative basis, first of all, when you look at the gambling stocks, they had been in a downtrend. I do think 2019 has turned around here for this group. We've made a breakout, having a pretty good day again today. But on a relative basis, you can see Caesars has been downtrending since hitting its relative high all the way back in October of last year. So some mixed signals here on the stock. And after gapping up and moving higher on a rumor, I don't like these kinds of plays. I think maybe you've got to move up to about 980 on the charts, 980 to $10. I think we really need to get a big volume break above that level before I would be a little bit more aggressive or more bullish on the stock. If we go back to the homepage, just wanted to mention a couple things. First of all, back in the sector summary, this is what I started with, top of the show. Industrials and financials leading. Healthcare not doing so great. And within healthcare, you can see it's healthcare providers and the biotechs really struggling today. Healthcare providers, I wanted to bring this chart up because if we look back, I'm going to stretch it out a year. This is a group that, again, you know, the overall market is back near its 2018 highs. Look at where healthcare providers is at. On a relative basis, this has been a horrible group in 2019, and especially over the course of the last 2 months or so. So we've got some big support levels coming up, and it certainly appears like healthcare providers are going to get there. And then the last one I wanted to show you was the biotech group. I wrote about this in my blog this morning, getting very, very close to a breakout. But as soon as we get up into this 2050 to 2075 area, this is where the sellers have been coming in. We're doing it again today, down 30 points. We were almost at 2050 yesterday on the close. We got as high as 2051 today and back down. Now, I have a question in the near term, and that is, can we hold this 20-day moving average? Because if we hold it and go back up and break out, we've got a PPO that's now moving higher above the zero line. This is going to be an interesting test here for the biotech group. If you're bullish the overall market, it would certainly help to have an aggressive biotechnology group breaking out to help the market overall. Okay, Mary Ellen, I know you've got some upgrades and downgrades, so I'm going to let you take it away.
Sure. Yeah. And interestingly, today there were very few in the way of upgrades. So we're only going to cover a few of those, and there were quite a bit more on the downgrade side. So let's go ahead and get started. This is Five Below, FIVE. The stock was upgraded, and we can see it's really gapping up quite nicely on the news, up a little more than 2%. The stock had been right here, this gap up at the end of March was earnings related. They came out with very good numbers. So the stock currently is poised to break out of a base. We are very close to that if we get a bit more volume. Super bullish look to the chart. The RSI is positive and your MACD trending upward. And then another upgrade was in that restaurant space, another retail type stock. This is Cracker Barrel, and it's really been in a downtrend. It's not participating. There are a number of other restaurant stocks that are doing quite well. The stock is attempting to gap up, but the downtrend very firmly in place. All of your moving averages trending downward, RSI, MACD in negative territory. Let's take a look at the only other upgrade that was out there, and this is a real estate investment trust stock, EQR, and the stock had really been trending sideways for some time here, and it's nudging up a bit on the news, nothing overly dynamic. There were a number of other what we call upgrades. These are stocks where coverage was initiated and they were cited as possible outperformers. And I would take a look at HA as a turnaround. That's Hawaiian Air, but a number of other names there. Let's go ahead and move on to the downgrades. I talked about there being a fair number. The first one here is Waste Management, WM is the ticker symbol. And take a look, the stock really gapped down on the news. What I like here is that buyers are coming in and supporting the stock. It's now currently up above that 50-day simple moving average. Bullish, this is a stock that I know very well. It's been on the buy list at MEM Edge for quite some time. So this is nice to see buyers coming in on the downgrade. TUES is Tuesday morning, another stock that was downgraded. And this particular company already had been in a real downtrend confirmed, and the news is not helping it much. It's down another 1%. We can take a look at US Steel. Downgraded. These number of steel stocks have really been in downtrends, continuing down further. Let's take a look at Eli Lilly. This is, Tom talked earlier about healthcare, and pharmaceutical stocks in particular really have not been going anywhere. This stock, Lilly, is now down 2% on the news. You can see the MACD is trending downward and RSI is now negative. We're going to want to see that hold support at the 50. Otherwise, potential more downside. Chipotle, this has been a big winner, but it's being downgraded, and I can imagine it's all about valuation. The stock has been on a real tear, and it's really not getting hit that hard, given that the stock was downgraded. And we can take a look at, let's see, this is MELI, Mercalibra, and it is another stock that was downgraded, and it's getting hit just a little. Let's take a look at this one last downgrade that we have here, KDP. This is Dr. Pepper. The stock was attempting to come out of this downtrend and break out. The news, stock's down 4%. It's now broken below that 50-day simple moving average. It's not a big volume mover, so it's hard to tell if this drop is on big volume or not. But once we see that break below that 50-day simple moving average, that does not bode well. And there were other downgrades. These are other companies where the analysts were talking negatively. HPQ is one. We can take a look at that quickly. And Dell, so a number of these were in the computer hardware space, and we can see the stock really is not doing quite well.
Mary Ellen.
Yes.
We've got that slide up so no one can see your charts at this point. I just wanted to where you went into it. So just wanted
Super. Oh, that's wonderful. Yeah, so we're good. And that's it.
Yep, that is a summary. Those are the ones that you had gone over, and then also some other upgrades and downgrades that folks can certainly take a look at and see if interested. But we are going to move into our guest, Roman Bogomazov. And Roman, I know we talked about this before the show, but it's probably been a couple months since you were on the show. And I'm guessing the S&P 500 at that time was probably down around 2,700. Now we're looking at an S&P that's closer to 2,900 and only 2% away from an all-time high. Has that changed your opinion at all on the market?
No. And Tom, please let me know if you could see my screen right now.
I do. It's perfect.
Okay, great. So today we're going to walk through the update on the market structure. We'll talk about gold and we'll talk about semis. And we'll start with the market structure. So let's come back to Tom's question. Did the view change since we last met here on this program? And I believe we were talking about the market structure somewhere here. So our assessment at that time was that the rally that we have had since the December low was too aggressive. There was a lot of momentum. There was a lot of buying there. So, and who was buying there? We saw that in the volume signature. Institutional money managers were buying. So that created that buying momentum that carries us back above the support level. So at that point of time, we were thinking that this is not the type of the rally that we would usually see in a bear market. It's too aggressive. So that was the assessment at the time. And I think it was a good call, because we're definitely overcoming the intermediate highs in October, November, December, and with the higher highs, higher low structure. So that just confirms the overall structure to the upside. Now, having said this, this is just a rally within a trading range. And I'm just trying to take another color here. Bear with me for a second. Thank you. Well, let's start from the beginning. Usually we would look, when we assess the market, we would look at the long-term structure first. And since the 2009 lows, and I've shown you, 2 months ago, and I'm sure everybody's showing you this, we're still in the uptrend. And what is happening in the long-term picture is that we are in the consolidation. And this consolidation happens within the up channel that we had since 2009. So the best conclusion that we could have here is just continue consolidating. And we'll talk a little bit more about how this consolidation could unfold. We're able to have, on the more intermediate term picture, a couple of points of resistance. We are in the resistance cluster right now. On the S&P, we got there, and now we're trying to see if we're going to come back under the buying climax resistance. So we define the intermediate trend as a trading range. In this trading range, as always with Wyckoff methodology, we want to understand the semantics as to how the structure unfolds. So we had a climactic action into the high in January of 2018. We had a very quick reaction to the downside that was climactic in nature on the increase of the volume signature, increase of the spread, velocity, momentum to the downside, stop in action on the selling climax, and then the later retest as the last point of support retest, an area of absorption that produced this rally, and then momentum started to fade away into the upthrust. Change of character, which defined that something is going wrong. So, and this is where we were switching our bias, at least short term. This was the most difficult area, just because absorption is not going to happen this way. There is quite a lot of volatility. That could have been an indication of the continuation. And obviously, when we had a move to the downside, you have to assume that we are in the unconfirmed bear market environment. Why am I saying unconfirmed? Well, because you would need to have a lower high, lower low, and then a breakout. The way how the rally, and this was what I've started, the way how the rally unfolded suggests that this is not a bear market rally. So therefore, structurally, we would determine that the low in December was a terminal shakeout in a much larger structure. What is that structure? Well, probably we are just in the trading range. And I'm going to show you some analogs of this type of structure. It's just a very complex structure that might last for quite some time. Actually, in some instances, it could last for years and years. Well, let's look at the short term now. In the short term, we're still in the uptrend. Again, a really good momentum to the upside. And then after that, look at this momentum kickoff. And then after that, if we would define where that momentum ends, this is where we're starting to see a different stride. And this is very typical after the momentum push, but we're still having higher highs, higher lows, and until we have a significant change in behavior, something akin to a large bar to the downside that breaks this short-term trend, commits below that support, and hopefully produces an increase in the supply signature, we probably will be talking short-term about the uptrend. So until it's done, there is really nothing else to say. So here is our market analysis picture: long-term uptrend, intermediate time frame in the trading range, short-term time frame in the uptrend. All right, well, let's talk about analogs, and this is something that I brought to your attention, about 2 months ago. What is this structure right here, where we have such a violent move to the downside, absorption as the reaccumulation texture takes place, a rally into the upthrust, then a distributional pattern, and a very aggressive move to the downside as a possible shakeout with the very aggressive rally after that. Okay, well, I've shown this before. I'm using an example of Tesla. Tesla in 2013-14 has been perceived as the stock that's going to outperform for quite some time, that has a long-term, a very bullish picture. So therefore, as we go into the change of character after the climactic action, we're seeing elements of reaccumulation. We're seeing elements of absorption that suggest the rally. And when the rally happens into the previous highs, we're starting to see a distributional pattern. This is more of a local distributional pattern than just a major distributional pattern. And it just suggests a move to the downside that might take us below the levels of support. And it happens kind of in the same way. There's a lot of aggression to the downside, with a significant commitment below the support area. It's out of this oversold condition where institutions are seeing value and they are finding liquidity. And those are the two things that institutions are looking for. They want to buy a short-term weakness in the long-term trend, and they want to have enough liquidity to open a significant position. And we have both of the requirements satisfied on this shakeout. And that's why the rally is so aggressive, because they also buying on the way up. Now, the Tesla analog brought us back into the highs of the previous reaccumulation and distributional highs. So that was the expectation even when we had our conversation 2 months ago in February as to what might happen. We said that the rally might just continue its way into the highs and might retouch those highs. So we're exactly there. Look at another example, another analog that we have here, Dow Industrial in the 1970s. And again, we have the scenario where after the uptrend, we have a pause that resolves itself into a rally. We have a local distribution and then a short-term downtrend that goes into a shakeout type of action, and then a very aggressive rally to the upside. Now, the key to this analogs right now is what happens next. So what did happen next? Look here. Look here. And that's why when we were talking with Tom last time about where the market's going to end up, is it going to be in single digits for the year or in double digits? My guess here, and I'm really guessing here, I'm speculating with this call, is that we are going to have a reaction first that's going to produce some volatility. It could be very seasonal going into the summer or maybe into the earnings period. And then we should have some period of absorption of the supply that's going to come. And we see this in both of the analogs. First, a sharp reaction to the area of the support, and then consolidation. That is the reaccumulation scenario. So as we look at our current picture, what that suggests is We are, first of all, very close to the high. Maybe we have made this high. Again, we have to see something significant, a change of behavior bar. And then we're probably going to have a reaction that's going to be the largest reaction since the low in December. That's going to produce a lot of bearish sentiment, especially in weak hands, and they're going to be giving up their positions. Also, don't forget that the money managers have made the money for the year. They are ready to, to call it a year. And they're just ready to take the profits and secure those profits. And we see this, selectively in some of the stocks and some of the sectors in groups. So that's could be the reason also of a local capitulation here that could bring us, to the lows, maybe to the lows that we've experienced in October, November. And then I would be expecting some kind of trading range. So it's all timing after that as to, where we're going to end up with this. I also want to show you really quickly, how those rallies developed in Tesla and the Dow in the years that I've shown. Well, after the shakeout, out of the extreme oversold condition, a very aggressive rally. So we're seeing institutions buying on the way down and then buying on the way up. And look at this. In both cases, we have a stop in action before the final move to the upside. Look what we're doing now. This is the Dow. And obviously, the Dow is underperforming the S&P and NASDAQ, but we still have almost the same triangular formation. This is just uncanny how those analytics sometimes work. And in both cases, we had some kind of local distribution here that produced that change of character reaction that we could expect. So that's why I would say that just be cognizant of how the price behaves in the near term going into earnings. If you're going to see a change of behavior, we're probably done with this rally, and we're probably going to see some profit taking that's going to be more meaningful and more significant. All right, now let's talk about gold and platinum and copper. The gold has a very big formation, and it's just so much fun to go through this. And by the way, in the yesterday's class, in the wake of market discussion, which I conduct with Bruce Fraser, we discussed gold, and we didn't go into gold stocks. So this is what I'm going to do today, for our students and for all of you who are listening right now. But the discussion yesterday about gold was all about this big structure. It's huge. Since the selling climax in 2013, it's been just nowhere. If you would have bought, gold somewhere here, you're basically breaking even at this point. But there are so many things structurally that has happened. There was a really great minus sign of strength rally that suggested that there was some kind of accumulation on the way up after we were going down and creating lower highs, lower lows. So that was a really positive sign. Then we had a reaction that had a lot of bearish characteristics short term on the daily chart, but it still created a higher low. That was another positive. Another attempt to go up, and another reaction which has the characteristics that are more bullish in nature than the previous reaction. The spreads diminishes, the volume signature diminishes, and supply is going lower. And then again, we are making a higher low. So bullish on the way down, and then bullish on the way up. So now we are at a very interesting spot. For 2 times, we were trying, to overcome the resistance, downsloping resistance that was created by the downsloping support lines right here. So we are at it again. This is the 3rd time, and now we are coming out of the apex formation or out of the triangle formation. Usually triangle formations will be associated with indecision, where the sentiment is neither excessively bullish or neither excessively bearish. And out of these formations, usually the price rallies pretty fast. And this being the 3rd time of the test of the resistance, in my opinion, I think that we are trying to break out. And I think this year, we're going to see this breakout to the upside. Now, if it breaks out and if it accelerates, I'm thinking about 1400 as one of my targets right here. And I wanted to pose a question to the audience, to the listeners. Where do you think gold could potentially be price-wise at the end of the year? Would you say that the gold could rally above 1400, or would gold stay below 1400? I have a stake in this already. A pack of Coors Light, Tom, I believe. So we'll see how that's going to end. That's going to be a fun bet, and I think I'm just trying to figure out and to win this bet. So we'll see what's going to happen. This is very interesting and this is very fun. So you know how with Wyckoff methodology we do horizontal counts. So there are 3 segments in this whole formation. If we would count this whole thing, we could divide it into 3 big segments. The first segment suggests that the price could potentially go to 1886. Now think about where the all-time high is, 1923. So this is a very logical target for us. It just basically brings us to the previous high. Okay, we want to go a little bit crazier and we want to say that, well, what if it's going to be a long-term campaign? Could we include segment number 2? So that brings us to 3300. So this is a very bold call right here to say, at 1250 about. But if gold is going to go into the trend, looking at the causality of it, so many years, the trend could be sustainable. Okay, and then the crazy call, 4352. So here I want you to stretch your imagination and think about the campaign that we have had since the lows in 2001, when the price of gold was $250, and into the high of 2011, where we hit 1923. Obviously, it took 10 years, but it got there. And maybe this is a little bit of the thinking that we should have for this type of big objectives, depending on where we are. Okay, well, definitely I would be concentrating only on segment number 1 right now. There's nothing else to do. Each segment has to confirm itself. Okay, so how else could we trade gold? Well, through different stocks, gold stocks. One of them is GOLD, Barrick Gold. And look at this pattern. What I like about this pattern is that with the downsloping formation right here, we finally recovered. There is less of the progress to the downside. We are recovering on emerging demand. We are seeing that supply is decreasing through the horizontal reaction, which is great. And we are trying to get above the 200 moving average, and this is the weekly, and we are trying to break the resistance line, so which is also bullish and positive. So these are the type of the stocks that we would be looking for in gold sector. Look at this stock, NG Nova Gold. I want to point your attention to the low volatility trading range that we are having lately in comparison to the previous one. We see that the reactions in the previous trading range are much more volatile, whereas in the most recent trading range, the spread is less, the reactions are less, so volatility is less, supply is going down. So these are the elements that are usually bullish elements. And other stocks, AU, and this is a very interesting stock because not only it has the causality, and then this causality in this range again, the volatility is so much less than in the previous accumulation range, but the rally that we just had off from $7 to about $16. This is a really good jump in a few months, 100% return. So that suggests a present institutional presence and urgency to be in that stock. So a sign of strength rally, we are in the backing up action. So we want to look into the structure on the daily here and just to determine the timing for the entry, but looks very, very interesting and good. Okay, another metal here, platinum. And it's just a fascinating chart and fascinating formation because we have a large triangle, an apex formation, and then we have a sprint situation. This is a Wyckoffin terminology. This is where the price commits temporarily below the support level and then recovers quickly back into the trading range above the support level. And here we see that some supply is coming into the mid of 2018. We see that in the increase of the volume signature, and yet we see the next high low acts as a test. And on this test, supply is definitely lower. Then we have a volume increase that suggests that institutions are coming in, and there is some urgency to be in this position. So there is an absorption that is happening in this area. And after that, we have a very dynamic rally, short-term rally. So a very interesting metal to consider. Again, I'm discussing different segments here with the PNF horizontal counts. And look at this, 1120 provides us with some kind of reference to the short-term resistance. Segment number 2 could be campaign count that could take us to 1860. And then if we're going to go all the way, this third segment could bring us to 2580, which is overshooting 2286. That was the all-time high. So when you do the horizontal count in those segments, you have to think in terms of what is reasonable there. Is there any elements of the resistance at that target zone? And when you usually see this, it kind of makes sense. It confirms it. All right, another metal, copper. And it's been outperforming. I had some trades, futures trades in it. And we're looking at the most recent formation here. And we're just looking at diminishing supply signature, local higher high, higher low. So a sign of strength and a backing up action. And we definitely want to go to the daily chart and to see how we could decipher the timing if there is an entry right there. On the causality counts, the conservative count, which is this lower count, brings us to 3.96, which is right here. That makes a lot of sense, and this is what I was saying. Find the target and then look at the previous formation. Was there a pause? Was there a supply coming in at that point? If we see that type of action, then this target really makes a lot of sense. Aggressive count, this whole count, brings us to 480, and the all-time high was at 4.65. Again, makes a lot of sense to me. But, you know, those are kind of like very bold calls. Okay, now let's look at the semis. This is something that we've discussed yesterday in the class with our students. We looked at the SMH, and SMH had a shakeout, a sprint type of action going into October, November, December lows. But it had its own structure there where it had a local sprint, and then this sprint recovered really fast. And what happens on this sprint is that we have this momentum coming in. We see that the volume signature has increased and more consistent. Look at the texture of the volume, which is so different than the volume spikes than we had before. Those things we need to notice as technical traders and analysts, because that suggests that there is a consistency of buying as the price goes down. Who is buying with that type of volume signature? Obviously, institutions. They have a lot of size. They want meaningful positions. They want value, which is the short-term value in this case, and they want liquidity, where weak hands are selling. They're giving up their shares, and the strong hands are picking it up. So let's look at some of the stocks in this area. And the first one is the latest darling, Xylene. Again, the stock that we've talked so much about, either in classes or here on MarketWatchers Live. I'm sure it has been mentioned many times. An apex reaccumulation structure, and then we see that during the market volatility, we're seeing a momentum kickoff with a lot of buying that's coming out of the institutional camp, and then no selling. into the December low, which becomes a higher low. So on the relative comparative basis, a much better stock, a much better selection. And then when we see that, we want to quickly put the Wyckoff label and layer on this structure. So we see how with the higher highs and higher lows, the first rally is producing a minus sign of strength, and then the price comes back into the area, and then a major sign of strength happens, and then the reaction is able to hold on the ground and don't come back into the trading range in a significant way. Why is this stock still interesting? Well, some might consider this a continuation pattern, even though it's coming as a wedge. Some wedges are actually resolving in the up movement and continuation. And look at what we're giving up here in terms of the reactions. Nothing. And that's on the background of diminishing supply signature. Let's look at the next stock. This is Maxim. And with Maxim, we are seeing a very violent climactic stopping action where a supply tail in the volume signature suggests that there was a lot of selling, most likely into some kind of news. And then we're coming back into the trading range on the change of character reaction and consolidating until the market volatility takes us down here in the shakeout type of manner. That shakeout is being tested on the December low. This is a higher low, much better than the market, suggests a possible outperformance, but the reaction itself has some supply signature behind it, so that suggests that there should be a retest of this reaction again. And look at what kind of retest we have. Instead of going into more of the vertical to the downside reaction, we are reacting horizontally. And that's one of the elements of structural strength that we want to observe, because usually that defines the timing of when the price will start going up again. And that again happens on the diminishing supply signature. I think I have one more. Cirrus Logic. And again, I love these patterns where we have a meaningful causality and meaningful structure. A structure where we see a general capitulation, a general stop in action, and even though supply is still present, and it takes us down to the new low, lower low, and then going into phase C, another lower low. But look at the supply signature, overall supply signature throughout this whole formation. It's decreasing, and then once we go into the sprint, that last commitment below the support cluster, we are only having 3 progressive closes to the downside, and then we're quickly coming back. Now, in a lot of cases, students are asking me, well, I don't see that the demand is increasing on the sign of strength rally as the price comes back into the area of the resistance. The price could move up on the diminishing demand signature under the condition that supply signature is diminishing or decreasing as well. And it's just a matter of absorption of supply that has happened prior to that. Okay, and I think that's it. Oh, I think I'm on time, Tom.
All right. First of all, great presentation. Thank you so much. There were a couple questions in the room, so I'm going to fire those at you if that's okay. The first one was actually a specific stock, CHAP, and the question was wondering whether or not this stock is setting up as a Wyckoff accumulation buying.
Okay. Look at that. Well, here's the stock, and well, first of all, when we're being asked, is there a Wyckoff structure in this stock? My answer is always yes, of course, because there is no really exclusivity to the structure, whether it's a Wyckoff structure or not. All of the structures could be analyzed from the Wyckoff method perspective. So here we're seeing a downtrend and a stop in action. So this stop in action with the volume characteristics and the climactic run characteristics would be identified by Coffins as the selling climax. And this is also typical for conventional technical analysis. This is a common terminology. A change of character rally that suggests that there is some buying behind it, whether this is just a short covering or institutional buying, provides us with the idea that we are going to be in the trading range. And this is the value of this concept, a change of character or a change of behavior. Also, we would label this as automatic rally. And then we need to retest the previous low, which was the selling climax. So this is a secondary test. And we have concluded our phase A. So from this point on, we would be thinking, we have a smaller structure here, so the question here is to decipher that, and then we might be in the larger structure. So we might be just either consolidating here, attempts to go up, maybe attempts to go down. But for me personally, this is probably not a very interesting stock at this point of time. It has not concluded either accumulation, or redistribution. In either way, you have to wait and define the timing a little bit better.
Okay, fair enough. Next question is, earlier you had a couple of charts up when you first started, long-term, intermediate term, and short-term, and there was a question as far as when you're looking at that was the chart. So when you're considering long-term, intermediate term, and uptrend, what is your definition for those three different time frames?
Long term, I always would like to look either at the cyclical or secular lows. In this case, 2009 provides us a generational secular low. So we are in the secular uptrend. And then looking at 2010, 2011, even 2012 to a certain degree, definitely 2015, 16, and now 2018. Those are cyclical lows. So this is my long-term definition. Intermediate, I want to see some kind of structure. And we're just in the beautiful structure right now, intermediate term-wise, where we are basically consolidating. And then short-term, I just want to see the low of this swing, and then I want to see some kind of reversal of this swing. And we still don't have this. We could go even lower. Sometimes I would go to like intraday picture and just to look at the behavior, intraday behavior that could be giving us some clues to the bias.
Okay. All right. Final one was, and I think you answered this right at the end of your presentation, but the question was, shouldn't a sign of strength be matched with a strong increase in volume? But I think you were also saying that could be simply a reduction or dwindling of supply as well.
Yes, and we could see this even here. So the volume signature is a little bit higher on the way down, and then look at what the volume is doing. The volume is going down. So think of this concept as absorption of the supply on the way down. If institutions are buying on the way down, and then they are buying in the first part of this rally, imagine that they stop, that this is their value zone. And then after this, there is nothing really that happening where there is a lot of aggression from them. So that will lower down the volume in general, but that also means that supply has been lowered so much, and it's not being presented to the market in a significant distributional way. So the price is just going to go up in availability of the major institutional supply.
All right. Let's see. I think that was it for the question. So, all right. Most important now, let's get into this bet that we have, because I'm going to put up a bottle of wine for you, and you're going to put up a case of beer for me, right?
Yes.
On gold. And 1,400 is the target at the end of the year. So if it's above 1,400, you got a bottle of wine coming. If it's below,
let's rephrase this, Tom. So I don't know whether it's going to be above 1,400 or not, but what I'm saying is that I think that we're going to have an attempt to break out this high right here, and this is going to happen this year. And I think that the price might touch 1,400. So my bet is going to be that the price at least will go to 1,400. Could we do that?
Ooh, wow. Okay, fair enough. If it hits 1400, I'll get you a bottle of wine.
Sounds great.
If it doesn't, you owe me a case of beer.
Absolutely.
All right, sounds good. Really appreciate you coming on, Roman. Look forward.
Thank you so much.
All right, there he goes. All right, very fascinating presentation. I love getting all these different speakers on with different styles and strategies, and some agree, with me, and I'm sure when you all are thinking about your own, assessment of the market, you probably see some of our guests that agree with you, some that don't, some that are much more bullish, some are much more cautious or even bearish, but it's great getting everybody's opinion and being able to look at it and see, evaluate the merits of the arguments. But Roman and Bruce, when they come on, always have a lot of great information to back up their position, whether long or short. And so I really enjoy having them on. All right, it is time to move into the 10 in 10, though. We want to make sure we get to everything else in the show. And I believe that our first one was PayPal. So I am going to pull up PayPal. And then, Mary Ellen, as I get done, you can take a look and see what else we have.
You bet.
All right. Okay, so there's the chart I have on PayPal, but I actually do have this annotated, so bear with me. This one was pretty easy for me. And again, without getting into price specifics, I mean, I love the rising 20-day moving average in an uptrend. So generally speaking, a pullback to test that 20-day would be something that I would be looking for. But what I like about this chart is just simply the way that it lines up, not only on an absolute basis, but also on its peer group, and then also on a relative basis. I like everything moving higher from left to right as we go across here. And I think you're going to see that beautifully on PayPal. So I think you got a really good looking stock here with PayPal. 20-day moving average would be a would be a potential entry for me.
Very good. And the next one is Aurora Cannabis, ACB, and you can do .to if.
Okay. I probably don't need that on the relative chart, so let me pull it up here. Yeah, it's still just sitting. I think I've looked at this recently. Look at the heavy volume coming up. It set a key top, and it has since pulled back and put in this reaction low, holding on to gap support. It went below it intraday, but we came back up and held it on a closing basis. So for me, and this is going, many of these stocks, I don't know whether they're in the midst of long-term uptrends or not, but they could be fad stocks. I'm just throwing that out there as a possibility. So I want to watch these key support levels. If they start to break down, I'm going to be pretty cautious, the group, because many of these are priced for perfection going forward. Huge growth rates, a lot of expectation of, little regulatory action. I just think there's a lot of things we need to be cautious about here. So on ACB, I would be watching this gap support level. And keep in mind also, I'm short-term oriented. I'm very short-term oriented in terms of trading. So I think if we go back down and lose gap support here, I'd be very concerned in the near term. So for me, 1140, 1150, I'd watch that area.
Okay, next one is NVIDIA, NVDA.
Yeah, and I know Roman was just talking about semiconductors, and NVIDIA has certainly begun to improve. We've got some overhead gap resistance that we're going to have to deal with here shortly. But let's pull it up on a relative chart and annotate that. All right, so a few things that I think are worth considering here. Number one, we are going to have some overhead resistance. Keep in mind that as we get above 200, we're getting very close to where we had closed prior to this huge selling. Now, I think it's good news that we finally got back up and took out the the bottom side of gap resistance. Now we're trying to get up to the top end, just above 200. I think we're probably going to get there because we have a very strong group, and NVIDIA on a relative basis is beginning to strengthen again. So if all of a sudden you see NVIDIA roll over, maybe lose its 20-day moving average while the group continues to go higher, that would be a problem, because then all of a sudden relative strength will take another hit. As long as, if I get into NVIDIA, I'm going to hold it as long as this line continues to go up relative to the S&P and to its peers in the semiconductor area. So I think that short term, I'd be looking for this 201, 202 area. Eventually a breakout above that would be bullish, though. .
Very good. And then EKSO.
All right.
Medical products.
Okay. Another one that's trending higher, although without even seeing a PPO, I have a feeling that we've probably got a negative divergence. It just, you can see the slope moving up here. And then as it's starting to put in these highs, you can just kind of see it almost rounding a little bit. We've got some overhead resistance, or we had overhead resistance at about 240, and then we got it again up about 280. This is a much smaller company, doesn't trade that many shares, and it's only a $2 stock. So it's not a lot of dollar volume in this stock. And when we look at it relative to the medical equipment group, and I'm going to annotate this because I think this is probably the most important thing to me, even though it is starting to strengthen a little bit on a relative basis, I think when we look at the relative strength that the stock, relative weakness really, from about eight months ago, I think it's still pretty startling. So what I would say is to watch the uptrend on this relative strength. And if that were lost, I would be careful, because medical equipment's been strong. And if this starts to roll over on a relative basis, I think there are a lot of better opportunities within this space.
Okay, then we have an ETF, OIH.
All right. Yeah. Overall, I'm not a huge fan of any of the oil services and so forth, mostly because on a relative basis, mostly because on a relative basis, energy and materials just haven't been doing well. And again, as long as we're in a rising dollar environment, I'm going to struggle to really be overly excited about this group. Now, we had gap resistance here that we did finally take out. We had some reaction highs that you can see that we're trying to get through. So I think short term, we've got a lot of congestion right in this area at about $17.5, $18. And we're sitting in that range right now. So first of all, we need to get a breakout, but I probably wouldn't trade it unless I was convinced that the dollar was beginning to roll over and trade lower. Once that happens, then I think you've got the possibility of outperformance in energy, oil services, and so forth. So I just think that there are other areas of the market right now that I would prefer to be in, because we are in a rising dollar environment.
And the next one is Dave and Buster's, PLAY.
All right. I think we had a character change. I like this coming back down to test this gap support and also the 20-day moving average. Look at the volume on this move to the upside, clearing prior highs. Now we're coming back down essentially and testing those highs. So this is an area on the chart that I think is certainly creates better reward to risk on the long side. So if I was annotating, again, what I'm looking at, I think you've got gap support right here. We're close to there, 50.5-ish. And then you've got that rising 20-day moving average that we tested earlier today, which I think should provide us some really nice support. So 50.5 to 51, I think, is a really good solid entry. And my target short term, if I was able to get lucky, get in 51, and move back to 55, that's close to 8%. I think that would be my short-term trading strategy.
Okay, and then VCYT.
VCYT, Vera site or something like that.
Yeah, very good.
Yeah, this is another one I think that looks really good in an uptrend, continues to hold its 20-day moving average, dropped below it one day, came right back up above it. Sometimes that's why I give a little bit more room below the 20-day moving average. And keep in mind, you've got a really volatile stock here. It was down just at the end of the year below $12, down close to $11. And recently it hit 26.5. So in a little more than a quarter of a year, this stock has gone up probably 125%. So, having a real strict stop right at the 20-day, you can see how that can be dangerous sometimes. But overall, I think you've got a really nice uptrending stock, and one that's coming in with a lot of volume. So I think there's accumulation taking place here. And what I would look for, if we were to pull back, I think the 22 to maybe 23.5 area, I think is a pretty good accumulation zone on this stock.
Okay, then we have another oil. This is oil equipment. IO is the ticker. It's a smaller name.
All right, IO. And by the way, I don't know if any of these that you're looking at, if you're pulling them up as well, Mary Ellen, any of them stand out to you, let me know.
Oh, sure.
Okay, so we've got sideways consolidation here after topping. Could possibly put in a higher low that would be an ascending triangle, but we got 2 equal highs. I would be watching that low right here because I just see a pattern of higher highs, higher lows. So as long as we're above 13.5, we're holding that 50-day, we're holding this price support, I think the stock goes higher. The one downside to me is this is a stock that tends to trade between maybe 100,000 shares ordinarily. So that would bother me a little bit, but technically looking at the price action, I think it looks pretty good.
And then we have a winning software stock, DOMO, looking quite interesting today.
Yeah, this one is actually one that I own. So when you,
good.
Right way. Oh, it was interesting. I was like, uh-oh, this is not good.
It looks good.
Yeah, I like the stock. I like it in the software space. And I'll pull it up relative to, or pull it up on a relative chart so you can see the relative strength. But when I get these stocks that make a big move up and are leaders and then make pullbacks, and keep in mind, again, you're looking at a stock incredibly volatile. Down below 15 in November, it gets up to 47.5 in March. That is a huge move. We're talking about more than a triple in 3.5, 4 months, maybe 5 months. So you got to give them time to pull back. You have profit taking. But one thing to watch here, I think, is that gap up right there. And then the prior high, which is right here. I think this is an area of solid accumulation. So I'm going to say 36 up to maybe about 37.5. Stock is rallying really nicely off of it. We see the volume starting to come back in. But what I like about it, and talk about this a lot on the show, is just how these absolute and relative charts set up. So there you can see software doing great. Domo relative to the software, very strong. Relative to the S&P, strong. And then there's your software moving higher relative to the S&P. So I just like to trade some of the stronger stocks out there. I think this is one. And when you get these stocks that pull back like this, I think they create opportunities for us.
Very good. And then we have another strong one. The last of the bunch is CAMT.
All right. And so this is our final one. Let me get this one up. Whoops, wrong typo. I actually bought the wrong stock one time.
Oh, no.
Yeah, I was into my brokerage account. And the two, I don't even remember the stocks anymore, but they were almost at the exact same price. And so I didn't notice the name. And I went in and I bought the stock. And when I was looking at my stock later, it might have been a couple of days later, the stock was doing really well. My stock was doing really well. And I went into my account and it was down. And I'm like, what the heck is going on? And I looked and it's like, wait, I'm not losing money on that stock. And then I realized I had the wrong
wrong ticker. Oh, nuts.
Yeah, some of the mistakes you make in this is crazy. But you know what happened? A lot of times what I like to do is buy right at the end of the day because I like to see what the candles finish at. And that was the exact thing that happened. I went in, it was like 359. I was trying to get my buy.
Oh my goodness. Yeah.
And I typed it in and it came up, price was right. Boom, got it. And then didn't notice it a couple of days later.
Oh my gosh.
Anyway, let's get through this.
That could go either way.
Yeah, it could. Unfortunately, I know which way it was going to go once I was into the wrong one. Yeah, this is a nice looking chart overall. Nice breakout. Here you can see a really good breakout. So these reaction highs all came in right at about 9.25. Look what happens when it gets through 9.25. Look at the volume coming in. I always like to get that confirming volume. Also, again, if we go through these charts right here, and you're going to see on a relative basis, the stock doing very well relative to its peers, relative to the S&P, and its peers relative to the S&P, just making a breakout. So this is a really nice looking chart. The only bad thing is you're stretched. And I imagine it's probably overbought on the RSI and stochastic. But I like the stock. So what I would do is maybe hope, if I'm looking for entry, I'm hoping that 1075 area holds as resistance and we get another pullback, maybe back to gap support, 975-ish, rising 20-day, something like that, possibly even to the breakout level down here around 9.25. But CAMT, I think, looks really good. And that is your 10 in 10. And there are your symbols that we just went over. And so now let's take a look at a market update. and then we'll get into the final segment. I'll make this one pretty quick here. First of all, you can see the Dow Jones, after taking a little bit of a hit after the 11 o'clock hour, trying to bounce back a little bit. Still only minor damage here, down 35 points. NASDAQ down 7, the S&P 500 down a fraction, and the Russell 2000 still showing a little bit of relative strength. It is up a fraction today. A huge day yesterday, though, on the Russell 2000. As far as the scooters, I always set up this technical ranking here, and you can do that by using these gears. Just make sure that your additional data panels is set up with the check mark, and if it is, then you should be getting these 3 panels. And I set mine technical rankings to the scooters, large cap, scooters, mid cap, scooters, small cap, and then I can just quickly look at the top up. So these will tell me the ones that are moving to the upside. I'm a momentum trader, short-term trader, so this is a very, very quick way to come up with some possible trading candidates. GoDaddy is one that I traded recently, made money on, pulled back, but today this is a really nice move. Up move, sideways consolidation in a flag, and now we're making a breakout, volume picking up. If this one holds above 78 on the close, I think this is starting another uptrend in GoDaddy. So just wanted to point that one out. All right, we're going to go into momentum sleepers, and I think that's a good one to start on because I really think GoDaddy going sideways there for a couple of months kind of exemplifies some of what we'll be looking at in momentum sleepers. So, Mary Ellen, I know you have some momentum sleepers for everyone, so I'll let you start it off.
Oh, you bet. Yeah. And in fact, the first name I'm going to be going over was on your scooter list as being up today, and I can gladly share why. What we're looking at here is a daily price chart of Netflix, NFLX. And so we're talking about sleepers. Netflix was a big winner. And surprisingly, year to date, they're up 35%. But we can see for a good 2+ months, the stock has been in a go nowhere environment. And so what we can talk about here is it is up a bit today. We're probably up a little bit more. I can refresh the screen, but analysts are coming out with earnings and estimates. The company is due to report earnings next Tuesday after the close. And of course, this is a big bellwether FANG stock, so a lot of eyes are going to be on this. It's going to be all about the subscribership. That's as opposed to earnings. Revenue is going to be important, but people are going to want to see an uptick in the number of subscribers. And the analysts today are surmising that March was a good month, and they are upping their estimates. So let's take a look at the stock technically. We can see that it really, as I said, has been in this range-bound period here, but this upward trending 50-day simple moving average is generally overall acting as support. We can see the RSI is positive. Now, when stocks are in a go nowhere environment, you'll see this phenomenon where the moving average convergence, divergence, your MACD, almost like a magnet, it will be drawn to this net neutral. So that's where we are currently, but with earnings due next week, you like to see estimates being revised upward going into earnings. So it'll be very interesting to see how this stock does next week. There's a lot of competition out there now with Disney having live streaming, and of course Amazon, and then Apple TV and so forth. So they did come out and beat. They came out with numbers earlier this year. The subscription base was up, but the stock actually dropped on the news. So again, all eyes on this. And if I have a second, I was going to show one other item as it relates to these FANG stocks. I just did a very simple candle glance with Apple, Amazon, Facebook, Google, and Netflix RSI, and then descending. And we can see Apple up here. This is strength to weakness. Apple, Amazon, Facebook, Google, and then Netflix down here languishing. So
cool, very cool.
Yeah.
Did you have any other individual stocks that you wanted to go over?
Oh, I thought we were doing back and forth. Yes, of course, I do.
No, just go ahead and go through what you have.
Okay, you bet. So the next one that we can take a quick look at here is a company that is in the data space. They help companies organize and interpret all of their data. SPLK is the ticker, and the stock is Splunk. Now, I will say I'm cheating a bit here because it was a sleeper here, but we can see it's picking up quite nicely here recently. And with this stock, we can see it had a very significant run in the earlier portion of the year, but really fell out of bed. And this is all about earnings. The company disappointed, the stock dropped, but it's really encouraging to see that it has found support here, potentially forming the right side of the base. Your RSI is positive, and this MACD, the black line up through the red, is positive. It's just coming up through that net neutral. So ideally, if we can couple this with a breakout to new highs, the stock really could be on its way, but it's definitely picking up here. Another software stock that we can take a look at is ServiceNow. And this is a company that is, it did start out in the HR department as far as their software, but they're broadening out their product range. And we can see it had a big gap up here. This is all about earnings. Company came out with very good numbers, but since then, it has really just been marking time. The company is due to report their earnings again later this month, April 24th. So that may be a potential driver as far as pushing the stock up. You can see the RSI is positive. Your MACD, again, we talked about when it trades range bound, the MACD will tend to trend downward. Like to see that positive crossover, that black line up through the red. Again, any kind of good news, if it's able to break above this 251 level on any kind of volume, that should help the stock do well. And let's take a look at another stock here that is in the payment processing space. That's been a very strong area within financials. We're going to take a look at Square, SQ. These guys are the leaders in point of sale their products. They have a card reader and so forth, but the company really has been in a go nowhere environment. And it's surprising given the strength in PayPal and some of the other mobile payment processors. The stock has just not gone anywhere. And this particular company, they're not due for their earnings until May. So wondering what the driver may be. But at this point, it is not a stock I would buy. It's in definitely a kind of a waffling go nowhere environment. Volume is low, not a lot of interest. I would look elsewhere. We can take a look at another payment processing stock. And we are going to look at a large bellwether, Visa. Big winner here, we can see, and it's really not as sleepy as you might think, but this is a stock that has been in a very big uptrend. Analysts continuing to raise earnings estimates, but it certainly for the last week or so, it has not gone anywhere given the relative outperformance in the broader markets. But we do still have very positive metrics with this RSI trending upward, MACD up there above that net neutral. And I'm going to go ahead with this stock and pull up the weekly to give a little bit more in the way of perspective. So what I'm showing you here is this stock has been really in a confirmed uptrend, taking us back to the beginning of 2017. Of course, stumbled with the broader markets, but the uptrend longer term still very firmly in place. I think I have time for one last one. DISCA. I'm going to pull up the daily. This is Discovery Channel, and this stock you'll see, well, actually it has picked up quite a bit, but it has had a lengthy period here of being in a go nowhere environment. These guys have a number of very popular TV channels, cooking channels, HGTV and so forth. But I wanted to point out this big gap up, or actually big move up on big volume that occurred yesterday. Analysts are raising estimates higher for the stock, and we can see that it was on super big volume, and it's really not giving a lot of that move, yesterday's move back, which is encouraging, meaning that the stock very well could be in an accumulation phase.
You know, I was just looking at your MACD there too. It was down below the zero line, and it's now come up and moved up above that zero line. So you're getting that confirming momentum indicator as well.
Very good. You're absolutely right. So it appears to be in the beginning phases of coming under accumulation.
Yep. And I have to say, I always like Splunk. I just love the...
Tom, you know, I said I threw that in there just for you.
Yes, you did. I know you did. Sweet. So sweet. Okay, let's. I'm going to go ahead and go over a few here as well. First, I just want to start with kind of my rationale for how I came up with some of these momentum sleepers. So first, if you look at the S&P sectors over the course of the last month, you'll see the technology's up 7.5%, consumer discretionary also 7%. You got communication services 3.75. So you can see we've had some pretty nice moves, but there have been some leading industry groups within these sectors that maybe haven't been participating in this latest move. And so that's where I'm going to look for my momentum sleepers. So what I'm going to do is I'm going to go into some of these different areas, and I'm going to look for individual industry groups over the last month that have not been anywhere near what we just looked at. One of them is mobile telecommunications. So the mobile telecommunications on this little snapshot here, you can see just recently broke out to a high at the end of March, but it's pulled back here in April. So the last couple of weeks haven't been too kind. And you can see over the last month, it's only up 1%. So you might kind of lose track of that group because of that. Also, look down at the bottom of consumer discretionary, footwear. Footwear, if you look at the snapshot there, was straight up in the first 2.5 months of the year. Took one big drop and is now kind of working its way back up, but over the last month is down 0.5%. So that is an area where we could have sleepers as well. And then the last one I had was in the industrial area, and that's in waste and disposal services, also up about 1.8%. But another group that had been on absolute fire through the first quarter of 2019 and April, we were seeing some profit taking. So I think we could find potentially some stocks in there. So that was kind of the rationale where I wanted to go. So I put those three groups on an RRG relative to the S&P 500. And I just, on a weekly basis, I just want you to look. First of all, they're spending almost all of their time for the last year over on this side of the chart. Here is that vertical line at 100 that separates relative strength. These are the relative strength winners, and left of the line is relative strength losers. And throughout the year, you can see that the majority of time for these three groups is spent on the right side of the chart. But we did just recently get a pullback in the mobile telecommunications group, and you can see both of these have kind of moved into the weakening. That's footwear and the waste and disposal services group. So I wanted you to see, okay, what are they looking like on the RRG? If we look at a price relative chart, I've gone with footwear. So here's footwear relative to the S&P. You see the long uptrend and how when it pulls back for a while and then starts to rise, that's when you want to get in, is on these relative pullbacks. Well, I think we might be in one right now. And if you look at footwear relative to the XLY, consumer discretionary, you can see that this is one of the best areas and has been within consumer discretionary for the past 18 months. And then finally, the XLY versus the S&P just broke out. I showed you that 7% over the last month on the XLY. That is helping this group break out versus the S&P. So consumer discretionary is favored. We have a strong group in footwear, but we've had some recent weakness, and I think that could be setting up some opportunity. So one of the stocks in the footwear space is Nike. Nike's been a really good performer for a long time. I'm going to go back a couple of years here on this daily chart, and you'll see nice uptrend, sideways consolidation. We broke out, put in a negative divergence, higher prices, lower PPO, pulled back to the 50-day, and I think just consolidating here at the center line. So I think Nike is a nice little momentum sleeper. Stock within the telecommunications area is T-Mobile. So T-Mobile, after putting in that double top, negative divergence, came back down. And of course, there were some stories coming out at the end of March. Stock went down on some pretty good volume, but it's come back up. And I think the overall trend remains in play here. So I think all of this sideways action here on T-Mobile is an opportunity. I think this is a momentum sleeper. And then I've got a couple of names in the, actually one more name in this space, which was Rogers Communication. Another one that had broken out in February, set a high, and you see the sideways consolidation. Once again, I think it's an uptrending stock, sideways consolidation, kind of losing track of it because it's not breaking out, but still in an uptrend. So I think this is a momentum sleeper. And then in that waste and disposal services area, a couple of names here that kind of stand out to me. And I don't know if there's any news that you're aware of, Mary Ellen, but CWST, Waste Management, and WCN, many of these stocks in this area were getting hit today.
Yeah, we had that downgrade. Waste Management was downgraded.
Okay.
And, there was another one in that industry.
WCN?
Yes, exactly.
Okay. All right, so that's the reason why we're seeing some weakness today. But look at them. All these stocks that were downgraded, and I think WM you talked about earlier, Mary Ellen, going down below that 50-day and has come back up. It's seeing buyers come back in. So I think stocks like those three could be setting up as a nice as momentum sleepers as well. So here are the momentum sleepers that we just spoke about, and you got them on your screen right there. Interesting lot. And really, that's what I look for. I actually tend to buy more momentum sleepers than I do chart breakouts. I like to get stocks that look really good in really good areas and get those on pullbacks. Okay, let's go into our poll for today. And I'm interested what your answer, Mary Ellen, was to these questions. And I'll give everybody my answer. But what's your thinking in terms of the various poll questions? Did you have a chance to look at them?
I did, yes. And a lot of them really did ring true for me. Certainly, technical price action is always going to trump fundamental. Fundamentals are going to be the foundation, certainly. But oftentimes, particularly when stocks break down, it's well ahead of the financials breaking down. So that's very consistent. So if you see a stock break support, come under distribution, you are going to want to pay attention, even if analysts are telling you that everything's great and that the earnings are going up. So that one. And the second one was a little harder. The relative strength more important than absolute strength was, I think there's 6 of 1. Yeah, I would go with the absolute. And then, yeah, so those two really rung true.
Okay, yeah, going down this list, the one that stands out to me without a doubt is Masters Weekend, the best weekend. Is absolutely correct. And we don't have enough golfers listening in here on Market Watchers Live, apparently, because although I like Ryder Cup as well, but those are definitely 2 big weeks. But yeah, getting away from golf for a second, technical price action, the 2 on top are the 2 that I would like to see even higher. I am a big fan of relative strength over absolute strength. And just to give you an example, if I'm in materials this year and materials are up, 10%, but the S&P is up 20%, that 10% absolute strength is nice, but you're underperforming the S&P 500. I want to be where the relative strength is. So that's where that question was kind of coming from. So I would say yes, that I agree technical price action above fundamental, yes to the relative strength, yes to the Masters, yes to the rising treasury, or no to the rising treasury yields. I do not believe that's bearish for equities. I think that's money that can be rotating away from treasuries and into equities. And then diversification is one that's on the fence, depending on whether you're longer term or short term.
Yeah, I think that's going to have everything to do with your risk tolerance. Certainly the best performer when you look at fund managers, it's going to be the focused 10, 20 holdings, and they're really good at what they do. Yep. But you need to be able to sleep at night. So.
Yep, no doubt about it. I'm not a fan of diversification because I'm a short-term trader and I get in and out pretty quickly. I want to go with strength. But anyhow, hope you enjoyed the poll and the show. Thanks to Roman for coming on and joining us today. And I want to thank all of you for being with us today as well. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. We'll see you back here tomorrow. And if you're looking for me, I'll be watching the Masters. See you later.
This video will show you how to add a date line to your charts. So if you have a whole bunch of stuff piled up here and you want a date line farther down, there is a way to put it on there and how to move it. So Down here under indicators, it's one of the options, date time axis, and by just moving it up and down with these triangle arrows, and notice this little blue arrow that moves with it, it'll help you position it exactly where you want it.